Question number 16 in practice manual. It is all about Ram and Shyam that had happened by 1/4/16. Same date, Ram purchased in Tom, but Shyam had purchased in Tom 2 years earlier, 1/4/14 itself. But all that you have to take it up as consolidation on 31/3/17. See, there will be a classification mismatch you can expect. What is considered to be revenue by Shyam in Tom, any increase from 1/4/14 as revenue, where the parent will object for the increase between 1/4/14 to 1/4/16 as capital. One company will classify the reserves and surplus of sub-subsidiary as revenue. The same will be taken up as capital for parent. So there will be a classification mismatch because subsidiary bought the shares much earlier to parent buying it in the group. So there will be a classification mismatch. Any happening from 1/4/16 to 31/3/17, they will consider, both will consider as revenue. There will be no mismatch in that particular item. Mismatch will be there only for the increase that took place from 1/4/14 to 1/4/16, isn't it? And there is no minority interest in sub-subsidiary. That minority interest portion of 25% was bought only by parent, Ram. And it is 80/20 in the case of subsidiary company. So now, profit and loss account of Tom Limited 640 I have taken up. On the asset side, I think they have just given. Is it? P&L account, there is no general reserve. That 640 is identified as the one existed at the time when Shyam bought in Tom 1/4/14. 160 was the debit balance, and the increase that took place is after acquisition 480. So capital 160 and 480 being revenue. Am I right? Then the same Tom Limited is taken up for classification purposes. Profit and loss account of Tom, the same 640, but for this company 480 existed at the time when parent got acquisition of 25% in sub-subsidiary, 480, and 160 was considered to be revenue profit. Are you understanding, all of you? So you have got to be a little more careful in handling this particular issue. Now, Ram Limited acquired investments in Shyam by 1/4/16. By then the general reserve stood at 2,80,000 and profit and loss account at 5,20,000. There was no dividend that they have paid. Right. So now general reserve of Shyam. General reserve of Shyam is 280. On the date of acquisition, it was 280 only, and after acquisition would be nil. This is capital, this would be revenue reserve. Profit and loss account of Shyam on the date of consolidation is 960. Date of acquisition and after acquisition. Date of acquisition 5,20,000, 4,40,000 capital profit, revenue profit. Then we do have something towards stock reserve. Stock reserve is 4,80,000 applied with 1/6 the on selling price, which is equal to 80,000 type, since it is sold by Ram Limited downstream. And then adjustment number 1, 2 are matter related to mutual owings. Item number 3 is towards dividend, which they say that they have not paid dividend. So therefore only 3 adjustments are quite an important adjustments. Now we have got to be a little more careful in handling this issue. Now Shyam in, that is Ram, Shyam in Tom. So what is the method we shall adopt? Direct or indirect? Direct method. But the problem, the solution is drawn under indirect. But we will just do that indirect also. Date of acquisition, date of consolidation, and revenue profit only. So I would like to draw this problem like piecemeal acquisition. So therefore, date of acquisition number 1, date of acquisition number 2, RP1 and RP2. But not single entity is buying, but two different entities buying in sub-subsidiary at various points of time. So therefore, it is not single DOA, it is two dates of acquisition that we have to take into consideration. Equity share capital 1,600. Profit and loss account, of course it is negative profit, so please be careful, negative figures are to be taken up. $480 and 160. How they work, please just don't see. So even if solution is given, you can't understand what they have just given. Because there is no reserves and we can close it. So 1440, 1120, 960, 480 negative and 160 negative. Percentage 75, 25, nil, 75 and 25. Investments and it is 720 and 200, resulting in capital reserve of 360 and 80. Are you understanding? Carry forward under indirect method. So we will take up 360 only. So carry forward for parent 40 negative. Okay. Now Ram in Shyam. Now Ram in Shyam. Share of revenue profit. How much? 40 will come towards the end. How much it will come? 360. But here is a place where you have got to be very careful. This 360 is the increase since 1414. 1414 for subsidiaries share. Whereas parent will accept increase in this number only from 1416 to 31370. Whatever subsidiary is considering it as, whatever subsidiary is considering as revenue, it is not revenue for parent. Are you understanding, all of you? So please always understand that parent will expect certain things in a perfect way. Whereas the subsidiary with sub-subsidiary, they will treat whatever increase that took place from 1414 to 31317 as revenue. But 1416 to 31317 is revenue for parent. So therefore, that portion will be taken into capital. In this 360, I will divide as from 1416 to 31317 as revenue, and from 1414 to 31316 as capital. Are you understanding, all of you? Say yes or no. This is the place where people would go wrong. How much of 360 is capital profit? How much of 360 is revenue profit? Tell. Say it should tally with 360. So I have to take up here as 360, but here I got to make something here. No, please understand. This is 75% which is coming. On that I am just asking. Not at the original number. So you have got to be very careful. What is there in the hands of the son only you should take up. Have you understood my discussion? Please go to that extent and bring out your discussion. Come on. How much is that? 120 is revenue. And how much is? If 120 is revenue, mind that, how much should be? 240. May I know how 240 has come? May I know how 120 has come? 360 divided by? But look into the profit and loss account which they are given on respective dates. On respective dates, you are dividing it by 3 as if they have not given you the breakup of profit. Fortunately, it is coming the same. I will tell you. Please just don't worry about that. I am just taking up 3 different dates in the case of Tom. Because it is only the Tom's profit in the hands of Sean is having this problem. This is 1414, 1416 and 31317. On this date, how much was the loss? It was 160, and today the loss is 640. So what is the increase that increase in loss took place? 480. 480 for how many years? 14, 15, 15, 16, 16, 17, 3 years. So 480 divided by 3 into 2. So how much it comes to? How much it comes to? 320, yeah. So then on this date, it should be 160 plus 320, which is equal to 480. Given in the problem as 480. we are very fortunate. It is not free left. You have turned left, no cop is there, you proceed. Not in every problem like that. Not in every problem it is like that. In this problem it is workable. Are you understanding, all of you? So, therefore, on this date, on 480 into 75%, how much is that? 360. This 360 only you are having this. Now, in this, you are expected to arrive at the balance as how much is for 2 years and how much is for 1 year. So, that being, you have to take up 2 years and 1 year ratio. Therefore, we have used 240 and 120. 2:1 ratio we have adopted. Are you understanding, all of you? Say yes or no. 240 is correct, 120 is also correct. Are you understanding? So, this we have not tried in other problems. So, this problem is unique that way. Are you clear? So, now you affect the total. Say, subsidiary took 480 as revenue profit and applied 75%, they got 360. Whereas, this portion of the increase is capital for RAM. Whereas, this will be revenue for RAM. So, whatever, please listen. So, whatever increase that took place is taken up as revenue for Shyam, which RAM is subjecting only for this portion. So, therefore, the 360 I cannot take up as revenue profit here and transfer, because Ram knew that Shyam had purchased 2 years earlier to Ram getting into the picture. Therefore, adequately we are expected to consider that 2 years increase as part of capital and only 1 year increase should be taken up as revenue. Therefore, on 480, this 480 is the total increase. We have also seen 2/3 of 480 working out to 320. So, 320 plus 160, 480. 480 is given in the problem. So, that means every year the loss is going to be the same when compared to next year's loss. And the following year loss is also the same. So, it is not share of revenue profit alone. It is share of capital profit for parent purposes. Understood or what? Say yes or no. So, let it be here. What is the total? 4000 plus 280 plus 520 minus 240. 4560. 4000 plus 280 plus 960 minus 360. 4880 dash 440 minus 120. 320. Are you understanding, all of you? So, how is this 240 we have arrived at? 480 divided by 3 into 2 into 75%. Am I right? 240. Are you understanding? 480 divided by 3 into 2 into 75%. Am I right? That's why we have just got. Percentage of holding 80, 20, 80. In RRA, okay. RR in which you are not having any increase at all. 4560 into 0.8. 3648. 4880 into 0.2. 976 dash 320 into 0.8. 256. Investments. 4,800. You have a goodwill. 4,800 minus 3648. 1152. So you brought forward. What are the numbers that you will be bringing it forward? Capital reserve 440, no? Capital reserve 440, nothing in minority interest. And the last one, how much is that? 40 in the negative. 40 in the negative. Stock reserve. How much is this negative figure for stock reserve? 80, yeah? 80 in the negative. Then SFS figure of the parent. SFS figure of the parent 1600 and 1360. Now CFS figure is 1152 minus 440, 712. Then this being 976, 1600, 256 minus 40 minus 80 plus 1360, 1490 plus 1600, 3090. Just look into consolidated reserves and surplus. Happier moment for them. What is happier moment for them? So direct method and indirect method, this consolidated reserves and surplus will be same. Now you can tell for sure that they have just done it under indirect method, because you look into minority interest number different, and the goodwill account is 688, whereas we are getting 712. These two numbers difference will be same. Are you understanding? That's all. So it is not to be scared of and all that. So you should have that ability to hit. That is, the amount of practice that you make should make you feel very comfortable in attacking. Now I would like you people to try under indirect method. See, now I have just done direct method and classification are all over. So we will invest our time in our classroom. So we should not have any fear for any problem. Please try this problem under indirect method. Are you clear about this one? So classification over, I have just done for direct method. Indirect method only you have got to do. All the rest. DOA 1, DOA 2, DOC, RP 1, RP 2. This is what you have seen in direct method. And I have the problem not for DOA 2. I have a problem only for DOA 1. Equity, share capital and P&L account. The title. Equity, share capital and P&L account. Equity, share capital. How much is that we will take up? 4,000, huh? 1,600. P&L account. P&L account 640. You have for various companies various numbers. So 160, and for this being 480, and because of that this being 480 and this being 160. On this there should not be any problem. No. So now this 160 I will take it up as 160 here. Correct? Are you understanding? This is the way we were doing. $1,600, 160 negative, 1440 and 1120, 960, 480 and 160. You apply the percentage. What is the percentage that you will apply? 25. Oh, sorry, 75, 75, 75, 75, 25, nil, 75 and 25. Correct? Now what is the net worth? 1,200. This will go directly. How much is this? 120 negative, and this of course is only dummy. Instead of DOA 1, I split them into equity share capital and P&L account. 25% on this. $1,120 into 0.25, 280. Then 360 negative and 40 negative. Are you understanding, all of you? Now what is that we will be doing? This 120 I will take it up as 120 here. In DOC column, how much I will take up? 480 I will take up. Are you understanding? Then for this investments I will take up. For this particular company investment I will take up. How much is that? 200, and we will end up with 200 then. Not this one. I will take up against I will take up this 120 and investments 200, which will end up with capital reserve of 80, and I take this to the next stage. What is that? DOA, DOC, RP, RR and RP. Let it be like that. Equity share capital, how much is that? 4,000, huh? 4,000, 4,000 dash dash. General reserve 280, 280 dash dash. Profit and loss account, how much is that? 960, and in this case 520 dash 440. Share of P&L account. Share of P&L account. How much is the share of P&L account? Remember how we have just worked out this number? 240 and 360. Are you understanding? $240 and 360. And now this 120 I have to push. This 120 is different, this 120 is different. This is indirect method. This 120 I have pushed it here. Correct? And this 360, what is it I have done? It is 360 plus 120. Are you understanding? Say yes or no. This 360 plus 120 is 480. But here I am not taking up 480 as one shot. I am taking up 360 and 120. Now what we will do is that we will affect the total. This is share of capital profit dash dash. What's the total? 4,000 plus 280 plus 520 minus 240 minus 120. 4,440. 4,000 plus 280 plus 960 minus 360 minus 120. 4,760 dash, and it is 360. Percentage 80, 20, 80. Net worth 4,440 into 0.8. 3552. 4,760 into 0.2. 952. How do you understand? 952. 952 under dash 320 into 0.8. 256. Then investments. How much is investments that you have? Now investments are two investments that you got to take up, and before that you got to take up that 1,200 directly. $4,752 extended net worth. Investments, you have to take up investments two. What are the two investments that you got to take up? Ram in Shyam, 4,800. Then Shyam in Tom, how much? 720. How much is the total? 4,520. Goodwill. Evlo? Sorry. 5,520. 5,520 minus 4,752. How much? 768 will come, because we have one capital reserve in the other case. Where is it? We have capital reserve. Capital reserve to the extent of 80 we have. Capital reserve brought forward. How much? 80. Net goodwill 688. Minority interest 952. And you are bringing forward, brought forward, put up, brought forward capital reserve. Then from the other one, 40 negative I have to bring in. 40 negative we have to bring in. Then stock reserve 80 and SFS 1,600 and 1,360. Then CFS 688, 952, 1,600, 256 minus 40 minus 80 plus 1,360, 1,496 plus 1,600, 3,096. This trouble you can avoid by taking up that 120. I told you, no, that 120 multiply it by 20%. How much is that? 24. That 24, if you adjust with goodwill and minority interest, you are directly getting it. I will tell you, direct method, goodwill and minority interest. How much is the direct method, goodwill? You know it. 712 and 976. Then adjustment to minority interest. What is this adjustment to minority interest? 120, that is, it was 160 originally. Remember that? 160 which was noted down. Where is it? We have noted down 160 here. 160 noted down into 75% from subsidiary and sub-subsidiary, they are holding 75%. On 160 you are taking up, and parent in subsidiary company 20%. How much it comes to? 24. Since it is negative figure, I got to reduce. Since it is negative figure, I got to reduce. And same amount of reduction I got to make it here also. And goodwill. So what is indirect method value that you end up with? 688,952. Matter over. So we don't have to just do, but if they have asked you to do only under direct method, we don't have any other go. In one of the examination they have asked. Very clearly they have asked. I think it was May 2015, in which the question did carry the instruction that you have got to do it under indirect method. So therefore you don't have any other go but to follow the instruction. I'll show you the examination question paper. இதுதான் 24 pages போறக்கூடிய exam question. What is a consolidated balance sheet as per schedule 3 following indirect method? Of course, that examination in which the space what they given line to line is double line. You should not just accuse CA Institute just like that. They were liberal in providing space, and therefore they have increased the number of pages, and cost would have gone up. So line space what they provide will increase the cost throughout. So okay, so please be careful. So now the time is 8 o'clock. Somewhere by 6:30 we have started. Of course you people have taken time, and I have worked under direct method, and now we have just done under indirect method also. So worth investing, mark it out as very important. So this problem you practice at least in a month 5-6 times, because under examination condition you need to be very swift in your operation. Otherwise we will be locking ourselves, because our love towards one particular topic might also be detrimental under examination condition. So you should increase the speed. So once you are encountering these sort of problems, you will feel very happy, because all the adjustments are very familiar and you can quickly attack. This is what I personally feel. Come on, kindly make note. Are you clear about this one? Have you done this? Haripriya, போட்டீங்களா? This one is the most complicated problem, I would say, because there is a mismatch in the dates of investment, and classification is very important. If parent had bought shares much earlier in subsidiary and subsidiary buying it later, then that is not going to pose difficulty at all. Only for this sort of problems you have that classification mismatch. Is that okay? So if you have any doubt, you can just ask, and then we will take up only 3 more adjustments. With that consolidation, it will get over. Now problem solving will be your responsibility. You understand? That's all as far as consolidation is concerned. This is a maximum complicated problem that we have in our institute source. In this computation, if you have any difficulty, please let me know.
Sir, indirect method, sir. Why we are not splitting up as RP1, RP2, sir? That in first 3 column we split extra 3 column.
Which place?
First subdivision.
This one.
Just the CPT share capital and P&L. We taken the figures of DOA 1 sir. Why we are not taking DOA 2's classification?
DOA 2 is, this is with respect to Ram and Tom. They have bought the shares by 1/4/16. This is by 31st of March 17. So this matter is related to parent in sub-subsidiary direct holding. Why I should make that classification? See, why this classification has come for other item? Because subsidiary bought the shares much earlier to parent getting into the stream. So whatever classification you see as capital and revenue is not acceptable to the parent. But parent directly buying in sub-subsidiary will not have any problem, because they will take all increase only from 1/4/16 as revenue. So therefore, for Ram in Tom, there is no problem at all. So this goodwill capitalism you can arrive at, and this computation will be over. I mean these items. These are all having no problem at all. Straight away we have taken up them to the next stage. The problem is with respect to subsidiary and sub-subsidiary, and the same is taken up for classification of the parent. Because parent bought it much later, whereas subsidiary bought it much earlier. So because of that, classification mismatch will be there. From any increase from 1/4/14, they will take it up as revenue by subsidiary, whereas parent, it is majority portion is capital, only the last 1 year it will be taken up as revenue. So in this particular case, DOA1, this is Shyam in Tom. So this we have worked out. This is indirect method where we will not find out goodwill or capital reserve. This capital profit of Shyam in sub-subsidiary will be taken to Ram's computation. So what is it we have done in the case of capital profit indirect method, capital profit indirect method? So the capital profit of subsidiary, the capital profit of sub-subsidiary attributable to subsidiary, when it is taken in the books of parent, we have a problem. That is what I told you. So there may be no problem between son and daughter-in-law. The problem is mother-in-law, parent is a problem there. I am not saying who is right or who is wrong. The problem is only mismatch. See, people fight only for dress and food. Dress, food, jewelry. Only for these items people fight. At home there is no substance at all in a fight. But they will fight only for this. I said you have to do this color. This person will do another color. I want this saree. No, salwar kameez only. This way they will all be just this jewelry. No, that jewelry. So the daughter-in-law will feel there is no liberty at all. What I want to do, they can't do. But parent is ultimately ruling for consolidation. So now, please understand the capital profit of sub-subsidiary attributable to subsidiary. When it is taken to the parent only, you have a problem. Because you classify as capital and revenue in one way, whereas parent will just say, what you are saying as revenue is not revenue, is capital for me. So for that only we are doing all this exercise. For direct method, we never had this problem at all. Straight away we have just taken up, except for the 360 rupees where we have taken 240 and 120. Excepting that, we never had any problem at all. The challenge becomes more when we take it up under indirect method. In a classroom, we have got to do both methods. and this is what we have practiced. So what had happened, this 160 we have taken for 75%, 120 you are taking it up as capital. That capital is no problem at all. You take up 120 and 120. Why 120 and 120 I have taken up is, please understand, this 120 is taken up for parent and this 120 is taken up for minority interest, 80 and 20. It is the same 120 only. We are taking up one for parents' share for goodwill and capital reserve. The other 120 I am taking it up for minority interest. Are you understanding? It is only single 120. But I am multiplying one column with 80%. The other column, which is for minority interest, I should also distribute the same 20%. That is the reason as why we have taken up. Here I said 480. But when I have written here, I have not taken it up as 480. If I write 480 here, there is a chance that you will take up this as 240. If I add 480, see what is the problem in, say you might just feel, sir is not doing 480, he had written at the top, but he had not written at the bottom 480. If I write as a matter of routine as 480, then your computation will go here wrong. Are you understanding? This portion cannot be altered at all for any reason. So that 480 effect I should give. What is it I will do? I will write 360 and write 120 separately. These are the practical challenges that you face. You need to adjust. Oh, what will happen if I add this 480 there? Are you understanding, all of you? 480 though I have written at the top, but when I have written at the bottom, I have written 360 separately, 120 separately. This 120 when I am writing separately, it is not affecting my revenue profit. Are you understanding? Each step has got its own significance. Once you start solving, I can tell for sure this way. You can just be going mad in solving, say, 100 problems in 1 month. All relating to chain holding and piecemeal acquisition. Never you will have any difficulty at all. It is something like cycling, or two-wheeler, especially with geared vehicle, and a car with gear, swimming. What is it you should learn? What is it you should do? When you are learning for the first time, learn and do the practice for a little longer period. So that even when you have a gap and when you are coming back for learning, so you can easily try. If a person is just doing this with only a short practice and when he is leaving a long gap, then believing that he is knowing is going to cost him heavily. It so happened for one person. He learned swimming and he just said, I just learned swimming and just got into the swimming pool. And only then he understood. Then he called for the help and people helped him. So therefore, it is a costly mistake people will be committing. What is that you should do? After this, try mad. Try mad. So try mad means you just try as many problems as possible, and after some point of time, even if you have a gap of 1 month and 2 months, not touch this, you will be in a position to regain the lost touch. Maybe in 1 or 2 problems you can just get that. Correct? No. Say yes or no. I have just done that way. For four-wheeler driving, I went mad. Wherever four-wheeler is there, whosoever is just driving, I said, I will do. Now I don't like. So once you just done that, and any car you can just do that. Left, right, all that you can try. But once you do it to the fullest extent, so that even at the age of 90, when you come back, you should be in a position of DOA, DOC, RRRP. That's the way you should take it up. So complete this exercise. I am not just telling just for giving that inspiration. No, it is practically I am telling. So you will just do that. Firstly, I thought I will just I have done by Excel. I thought I will show you this. I was searching the file, but I am not getting. So it's all God sent opportunity only. I have just done manually here. Originally, I have done only through Excel. So better than that, this is, I would consider this presentation is much better than what I have done by Excel. Okay. Are you clear? So mark it out with 7-star, super 7-star problem. This is a maximum complicated one in consolidation. Yeah.
Due to indirect method, the change for minority interest is minority interest
120.
into this capital profit.
Correct.
for same goodwill also it should be the capital profit into goodwill percentage of holding on that.
Correct.
But we are getting the capital profit into minority percentage.
Same thing only.
120 to 20% we are getting as an increase. But same goodwill is increased by 120 to 80%. Change in goodwill, I guess.
Firstly, you should understand a balance sheet. What change I make in goodwill, there is minority interest, should be the change that I should take it up. So, in one case you cannot take up 20, in another case you cannot take up 80. How that will match? So, that approach itself is not appropriate. When I make change for minority interest, same amount of change I should make it in goodwill. That is appropriate. So, I will make change in one place 20, another place 80, but yet my balance sheet should agree with me. How it will agree? And one more important thing, I have not computed goodwill in the very first place. I have computed goodwill for parent's interest in subsidiary only, but I have not attempted the goodwill computation of subsidiary in subsidiary. I have not done that. Only for that purpose, that 1,200 rupees we have dragged from that place to find out an extended net worth. Isn't it? And whatever capital profit that I have computed previously for that is 160 into 75%. That 120 only I have taken for minority interest share. I will put it this way. Forget about all this. What is indirect method? On the other day, I am just telling you, the capital profit of subsidiary attributable to subsidiary is to be distributed between parent and minority interest. Did I not tell you that? This is the way I will put it this way. Capital profit of subsidiary. What was your capital profit of subsidiary? 160. Attributable to subsidiary, 75%, 120. That 120 is distributed between parent and minority interest in the ratio of 80-20. That 80 I will take it for my goodwill purposes. That 20 is what I will be taking for minority interest of subsidiary, that being 24. That 24 only I have deducted from the minority interest what I have computed under direct method, and that's the way we are getting a minority interest under indirect method. Matter over. Let me repeat. No, the result. Subsidiaries capital profit on which you have to take up for the share of subsidiary, and that should be distributed between parent and minority interest. What change is going to happen because of this is minority interest of subsidiary. That 24 rupees. Why I have deducted? Because this number is in the negative. So when I am deducting, so much of deduction I got to make in goodwill. That's all. Here goodwill is computed separately. Whereas under direct method, combinedly we have prepared at the very initial stage itself. We ended up with capital reserve for both the cases. Think. So it may not be possible at same point of time to think. At a later point of time when you munch all this, so you will get a new idea. You will be in a better shape to understand. Are you clear? See, there is a method, there is a way through which you can switch your answer from direct to indirect. This is a small working. What is that way that we can adopt? Just remember, I will be taking up separately these numbers, no? Equity share capital separately and P&L account separately. On equity capital, we will be taking up directly through their bypass. On this 160, if you apply 75%, how much it comes to? 120. That 120 and this 360 will be conjoined. 120 will be taken under date of acquisition, and in the date of consolidation we will be taking up as 480. So that 120 and 480, when you compare, the difference what you get will continue to be 360. How much is the addition that we will be pushing across? 120. That 120 you are increasing it in DOC, and against that what is your minority interest that you have, parent in subsidiary, 20%. 120 into 20%. How much is that? 24. 24 is the increased value that I got to do. So what is your value that you end up with? Since we are having this capital reserve in our computation, we can't add, we have got to deduct. From 976, if you deduct 24, 952 is what you have. So when I am reducing my minority interest, our goodwill should also be reduced. So on your 712, reduce 24. 688. That is what they have given as the problem. Understood or what? Not understood? Huh? I will just do that. DOA, there is, you have DOA 1, DOA 2, DOC, RP 1, RP 2. This is what you have seen in direct method, and I have the problem not for DOA 2, I have a problem only for DOA 1. Equity, share capital and P&L account. The title, equity, share capital and P&L account. Equity, share capital, how much is that we will take up? 4,000, huh? 1,600. P&L account. P&L account 640. You have for various companies various numbers. So 160, and for this being 480, and because of that this being 480 and this being 160. On this there should not be any problem now. So now this 160 I will take it up as 160 here. Correct? Are you understanding? This is the way we were doing. $1,600, 160 negative, 1440 and 1120, 960, 480 and 160. You apply the percentage. What is the percentage that you will apply? 25. 75, 75, 75, 75, 25, nil, 75 and 25. Correct? Now what is the net worth? 1,200. This will go directly. How much is this? 120 negative. And this of course is only dummy. Instead of DOA 1, I split them into equity, share capital and P&L account. 25% on this. $1,120 into 0.25, 280. Then 360 negative and 40 negative. Are you understanding, all of you? Now what is that we will be doing? This 120 I will take it up as 120 here. In DOC column, how much I will take up? 480 I will take up. Are you understanding? Then for this investments I will take up. For this particular company investment I will take up. How much is that? 200, and we will end up with 200 then. Not this one. I will take up against I will take up this 120 and investments 200, which will end up with capital reserve of 80, and I take this to the next stage. What is that? DOA, DOC, RP, RR and RP. Let it be like that. Equity share capital, how much is that? 4,000, huh? 4,000, 4,000 dash dash. General reserve, 280, 280 dash dash. Profit and loss account, how much is that? 960, and in this case, 520 dash 440. Share of P&L account. Share of P&L account. How much is the share of P&L account? Remember how we have just worked out this number? 240 and 360. Are you understanding? $240 and 360. And now this 120 I have to push. This 120 is different, this 120 is different. This is indirect method. This 120 I have pushed it here. Correct? And this 360, what is it I have done? It is 360 plus 120. Are you understanding? Say yes or no. This 360 plus 120 is 480. But here I am not taking up 480 as one shot. I am taking up 360 and 120. Now what we will do is that we will affect the total. This is share of capital profit dash dash. What's the total? 4,000 plus 280 plus 520 minus 240 minus 120. 444 0. 4,000 plus 280 plus 960 minus 360 minus 120. 4760 dash, and it is 360. Percentage 80 20 80. Net worth 4440 into 0.8 3552. 4760 into 0.2 952. How do you understand? 952. 952 under dash 320 into 0.8 256. Then investments. How much is investments that you have? Now investments are two investments that you have got to take up, and before that you got to take up that 1,200 directly. $4752 extended net worth. Investments, you have to take up investments two. What are the two investments that you got to take up? Ram in Shyam 4,800. Then Shyam in Tom. How much? 720. How much is the total? 4520. Goodwill. எவ்வளோ? sorry. 5520. 5520 minus 4752. How much? Parvala, 768 will come, because we have one capital reserve in the other case. Where is it we have capital reserve? Capital reserve to the extent of 80 we have. Capital reserve brought forward. How much? 80. Net goodwill 688. minority interest 952, and you are bringing forward, brought forward capital reserve, then from the other one 40 negative I have to bring in. 40 negative we have to bring in. Then stock reserve 80 and SFS 1600 and 1360. Then CFS 688, 952, 1600, 256 minus 40 minus 80 plus 1360, 1496 plus 1600, 3096. This trouble you can avoid by taking up that 120. I told you, no, that 120 multiply it by 20%. How much is that? 24. That 24, if you adjust with goodwill and minority interest, you are directly getting it. I will tell you, direct method, goodwill and minority interest. How much is the direct method, goodwill? You know it. 712 and 976. Then adjustment to minority interest. What is this adjustment to minority interest? 120, that is, it was 160 originally. Remember that? 160 which was noted down. Where is it? We have noted down 160 here. 160 noted down into 75% from subsidiary and sub-subsidiary, they are holding 75%. On 160 you are taking up, and parent in subsidiary company 20%. How much it comes to? 24. Since it is negative figure, I got to reduce. Since it is negative figure, I got to reduce. And same amount of reduction I got to make it here also. And goodwill. So what is indirect method value that you end up with? 688, 952. Matter over. So we don't have to just do, but if they have asked you to do only under direct method, we don't have any other go. In one of the examination they have asked. Very clearly they have asked. I think it was May 2015, in which the question did carry the instruction that you have got to do it under indirect method.